Hello and welcome everybody to this Field Group COVID-19 webinar. My name's Jon Traynor. I'm the Managing Director here at the Field Group. What we're going to cover today is everything Jobkeeper. So that's eligibility, how you register, and go through some frequently asked questions that myself and the team have been asked over the last couple of weeks. Just before we get started, I want to direct you to our website and our knowledge base. So in that knowledge base, you'll find recordings of this webinar, our blog posts and everything else, all our other resources that we've put up in relation to COVID-19, including the employee nomination form that you've got to send for, you've got to give to all your Jobkeeper eligible employees. So we'll make a start. What is Jobkeeper? So the Jobkeeper payment is a subsidy that will be paid through the tax system to eligible employers impacted by COVID-19. The purpose of the scheme is to keep people employed, even though the business they work for may go into hibernation or slow down or close down for a temporary period. Eligible employers will be able to claim a subsidy of $1,500 per fortnight per eligible employee from the 30th of March 2020 for a maximum period of 6 months. Now, this subsidy will be paid by the ATO monthly in arrears and will ensure that an eligible employee receives a gross payment of at least $1,500 per fortnight. Sole traders and other entities such as partnerships, trusts, or companies may be entitled to a Jobkeeper payment scheme under what's called the Business Participation Entitlement. Now, what I'll also say with Jobkeeper is if you are eligible, it also has your business fall into the code of conduct for commercial tenancy, which will get you in a whole range of rules that you can use when negotiating with a landlord for a rent reduction. So there's certain obligations that both the tenant and the landlord have to follow if you fall into that code of conduct. So when is a business eligible for the Jobkeeper payment? To be eligible, you must be if you're a business of less than 1 billion of turnover, you must have a 30% drop in turnover comparable to a period of a year ago. If your business turns over more than $1 billion or is linked to a business that turns over more than $1 billion, you must have a turnover drop of greater than 50%. Now, to be eligible, the business must not be subject to the major bank levy. So any of the major banks won't be eligible for this Jobkeeper subsidy. Now, how do you measure turnover? Turnover for this purpose is calculated on the same basis as it is for GST purposes, with one exception, and that being if you report your GST on cash, you have the option when determining your turnover to measure that on the accrual basis. The decline in turnover test operates by comparing the entity's projected GST turnover for a turnover test period with the entity's current GST turnover for a relevant comparison period. Now, I'll go through some examples in a sec on what that means. The turnover test period is a calendar month that ends after 30 March 2020 and before 1 October 2020, or it's a quarter that starts on 1 April 2020 or 1 July 2020. The relevant comparison period is the comparable month or quarter in 2019 that corresponds to the entity's turnover test period. So what we've got here is an example where a business can either compare the whole month of March 2020 with the prior year month of March 2019, or it can project its April to June 2020 quarter with what happened in the April to June 2019 quarter. Now, the key point here is that this test or this drop in turnover only needs to be satisfied once for your business to be eligible for the Jobkeeper subsidy for the duration of that program. So for your business to be eligible, and I'm making the assumption you're turning over less than $1 billion, you need a 30% drop in turnover, either in March, you either expect a 30% drop in April, or you expect a 30% drop in the April to June period. Now, if you can satisfy that, you'll be in these rules, assuming you've got eligible employees. So there is an alternative test where there is no comparable period or the comparable period may not accurately reflect the downturn in activity that the business has suffered. The rules provide the commissioner with the discretion to allow a business to enter Jobkeeper. Now, examples there are where a business may not have been in operation for a year. The turnover from last year is not representative of the normal turnover of that business. The business was newly established, or the business has scaled up from last year, or their turnover is typically highly variable. So there's a lot of examples of businesses that don't fall into these Jobkeeper rules based on the turnover test. What we're waiting from the ATO is some guidance on how that discretion is going to look. We're yet to see that discretion. Our expectation is if you can demonstrate that your business, even if it hasn't been in operation for 12 months, or your business is scaling up, if you can demonstrate that your business has been significantly impacted by COVID-19, our expectations are that you will fall into these rules. But that said, there's been no guidance from the Commissioner on what that discretion is going to look like. But we're hopeful we'll see something over the next week or two. Now, which employees are eligible? An individual is an eligible employee of the employer where they are employed by the entity at any time in the fortnight. On the 1st of March, they were 16 years or over and were either a full-time or part-time employee of the entity, or they were what's defined as a long-term casual, which is a casual that's been engaged in the business for a period of longer than 12 months. Now, on the 1st of March, they also needed to be an Australian resident or the holder of a 444 visa. Now, the final eligibility criteria is they must be nominated by the employer as an eligible employee, and they must give a declaration to the employer that they are willing to enter into this scheme. And business participants who are not employees, so the rules also allow a limited entitlement to the Jobkeeper payment for certain individuals who are not employees of these entities, but who are actively engaged in the business carried on by either a sole trader, partnership, trust, or company. Now, in relation to the fortnight, the individual must have been actively engaged in the business carried on by that entity. And if that is the case, the criteria allows that entity can nominate one active business participant to receive the Jobkeeper payment. So what that means is if you're a sole trader, even though you won't be an employee of your sole trader because you're not allowed to be, but you will be eligible for the Jobkeeper subsidy if you can demonstrate that 30% drop in turnover, and you will be eligible under this business participant entitlement. If you're a partnership, it's only one of the partners or in that partnership that will be eligible or can be nominated as an active participant for the Jobkeeper scheme. Now, that doesn't mean the Jobkeeper will be paid to that individual. The Jobkeeper payment will be paid to the partnership, and the partners will can make a decision on whether they share in that payment or not. Similar with a trust, so you can nominate one trust beneficiary to get the Jobkeeper payment, and with a company, it's either one director or shareholder of that company. Now, if you hold those shares in the company or you're a beneficiary in a trust or a unit trust, unfortunately, you're not eligible under this business participation entitlement. So how is the Jobkeeper payment applied by an eligible business? The underlying purpose of the Jobkeeper payment is to ensure that eligible workers are paid a gross minimum amount of $1,500 per fortnight. Now, the employee will receive this payment as follows. If the employee ordinarily receives at least $1,500 per fortnight in salary, the Jobkeeper payment will effectively subsidise that employee's fortnightly income. If the employee ordinarily receives less than $1,500, then the employer is going to have to top that payment up to $1,500 so that the employer and the employee can become eligible for this Jobkeeper scheme. if an employee has been stood down and is still engaged by the business, you're going to need to pay them an amount of $1,500 per fortnight so that they can receive the JobKeeper payment scheme. Now, there's been some clarification on that over the last, 24, 48 hours. There is an one in all in test. So you cannot pick and choose which employees become eligible for JobKeeper. So if you've got an employee that's on stand down, you'll be forced to pay them JobKeeper if you want to continue to engage that employee. Entitlement on a prospective basis. So a JobKeeper fortnight is defined as the fortnight beginning on Monday, the 30th of March 2020, and each subsequent fortnight with the final fortnight ending on Sunday, the 27th of September 2020. Now, entitlement only arises for JobKeeper fortnights and later fortnights in which eligible employers are registered under the scheme prior to the end of the fortnight. So if an employer does not become eligible until later in the JobKeeper period, they cannot backdate or claim their JobKeeper payments back to the 30th of March. So what that means there is, and there is an exemption for April, but if you measure a 30% drop in turnover in May, you won't be eligible to go and claim JobKeeper in April, because you would have needed to have made that registration prior to April and notified the ATO that your employees were eligible. So it is a payment that's paid in arrears, but you must nominate up front which employee that you want to nominate for the JobKeeper scheme, and you've got to nominate which employees are eligible. So how to apply? You need to log into your business portal on the ATO's website using your MyGov ID, and there you can complete the registration form for JobKeeper. If you don't have access to the business portal, please contact your accountant at the field group, because we have access to what's called the tax agents portal, where we can help you complete that registration. Now, employers also need to give eligible workers a JobKeeper employee nomination notice. Now, that notice needs to be kept by the employer, but doesn't need to be sent to the ATO. But you need to nominate your employees, let them know you've nominated, and receive the nomination notice back from the employee before you can go to step 3, which is to report in single touch payroll which employees are eligible for JobKeeper. If your software isn't eligible or isn't single touch payroll ready, you need to manually identify these employees in your business portal, or let us know which employees you're going to nominate for JobKeeper, and we can tag them on the portal in relation to them claiming JobKeeper. So final slide, ongoing reporting. There is a monthly reporting requirement with JobKeeper. So even though the business only needs to show a drop in turnover in one period, you do need to report to the ATO within 7 days of the end of that month what your current GST turnover was for the reporting month, and what your projected GST turnover is for the following month. So our assumption is that the ATO are going to use this data to try to catch out those businesses that have manufactured a drop in turnover to be eligible for this JobKeeper scheme. So e.g., if you're a business that normally turns over $1 million a month and you miraculously turn over $500,000 for 1 month to meet the JobKeeper eligibility, and then the next month increase your turnover to 1.5 million, and then your turnover remains $1 million, I think you're going to be a high risk candidate for an audit from the tax office in relation to JobKeeper. So on that high note, I'll end the webinar in relation to eligibility and how to apply for JobKeeper, and just go into some of the frequently asked questions that we've been asked in relation to JobKeeper. So the first one I've missed paying some of my employees the minimum $1,500 in the first JobKeeper fortnight. Can I still apply for JobKeeper for that first fortnight? So for the month of April, and it's the month of April only, the ATO have allowed you to go back and top up employees that didn't receive $1,500 in that month, so that the employee and you as the employer are eligible for JobKeeper. So that's an important exemption for this month only, I guess, to give businesses the chance to get their head around these rules, work out whether they're eligible, and if they haven't paid their employees the right amount, give them the opportunity to top those employees up. Once again, if you're unsure how to do that in your payroll system, please go back to your accountant here at the field group, and we'll give you a hand on getting those top-up payments processed through your payroll system. Once an entity satisfies the declining turnover test, does it need to retest its turnover in later months? So hopefully my points got through from the webinar. You only need to test your turnover once. So there's no requirement to retest your turnover, but there is that requirement that I just mentioned in regards to reporting your turnover every month to the tax office. So it's by signing up to this, you're signing up to reporting numbers monthly to the ATO. Can you pick which employees are eligible for JobKeeper? Unfortunately, no. So we received that one in all in confirmation earlier in the week, which means you need to make all your employees, so that's your full-time, part-time, and long-term casuals, eligible for JobKeeper, unless those employees opt out of JobKeeper for any reason. So that may leave you as the business owner with a decision on going, well, do I terminate those employees if I can't fund the JobKeeper payment? And if you terminate them, what's the impact of that going to be when you look to reopen your business, or when you look to, when you get back to normal trade? If a business elects to be involved in the JobKeeper scheme because it projects that its turnover will fall by more than 30%, what happens if the fall in turnover turns out to be something less than this? So this is something that we're still waiting on guidance on from the ATO. What they have said is that if the business made a reasonable estimate that their business would drop by 30%, and the business, for whatever reason, fell close, so ended up being 28%, 29%, there is a discretion where they will allow that. Now the question becomes, is it 28 or 29%, or is it 20%? And unfortunately, we don't know what that discretion is going to be. I think if your business, you project a fall and your business ends up making more income than what you anticipated, I think you've got to be ready to potentially pay that JobKeeper subsidy back if you will weigh out in your estimates. Does a business have to wait until it lodges its BAS before it gets its JobKeeper payments from the ATO? So this one's a no. So as part of the JobKeeper subsidy, the ATO are going to do a check that all lodgements are up to date, or there has been some participation from the business in regards to keeping their obligations up to date, but there's no specific requirement that BASs get lodged for this JobKeeper payment. And that's fortunate, because a lot of the quarterly lodges won't have a BAS. They'll only have one BAS payment through what may be a 3 or 4 month period of JobKeeper. A sole trader has an ABN but has never lodged a BAS because it is not registered for GST and does not deduct pay-as-you-go withholding. Can the entity claim JobKeeper for the owner of the business? So the answer there is yes, but there's one extra condition, and that's that business must have lodged its 2019 tax return with business income by the 12th of March 2020. Now, there is a discretion where the business hasn't lodged by 12th of March 2020, but where, once again, that's in the category like the new businesses, where we're waiting to see what that commissioner's discretion is going to be. But certainly if you've already lodged your 2019, or you lodged your 2019 tax return before 12 March 2020, and your business has had a 30% drop in income, you're going to be eligible for JobKeeper. What happens if a business is unsure about whether it will have a 30% decline in turnover for June 2020 quarter in April and May 2020, but realizes that it will have such a decline in, say, 10th of June 2020? Can it still enter the JobKeeper scheme, or can it legally backdate its involvement to 30 March 2020? So you need to predict what your turnover is going to be. So if you were to, you can't backdate your application. So if you only register for JobKeeper on the 10th of June 2020, even though the business has had a drop in turnover for that quarter, you're only going to be eligible for JobKeeper from 10th of June 2020. So really important that you keep your accounting system up to date, and also you'd be looking at those numbers and comparing them to a comparable period so you can make the earliest possible assessment of when to enter the JobKeeper scheme. Our business commenced in October 19. How is the decline in turnover test calculated for this business? So this is another one we're waiting for guidance on. That business that commenced in October 2019 isn't going to have a March, April, or April to June quarter comparison. So it will need to demonstrate it's going to need to demonstrate that it was severely impacted by COVID-19, and we're waiting for Commissioner's discretion to see how that could potentially be measured. Normally, a business pays one of its employees $800 per fortnight. What must it do under JobKeeper? If business pays them $1,500, can the business ask the employee to work extra hours or assume other duties? So if that employee is an eligible employee under JobKeeper, the business will have to top them up to $1,500. Now, whether they can ask the employee to do extra work on that or assume other duties is going to depend on what business you're in, what's been the traditional relationship with that employee, and Fair Work have released some guidelines as to how you could direct an employee to work extra hours or assume other duties. You're going to have a problem there where if you're directing the employee to do extra hours or assume other duties that they're not capable of. So I'll push you back to Fair Work in relation to that one, but I think the important thing to bear in mind there is if the employee is paid less than $1,500, you are going to have to top them up. And then whether you can ask them to do extra work for that top up is going to depend on what industry you're in and what sort of awards you fall under. Now, are personal service businesses eligible for JobKeeper if operating through a company or trust? No wages are paid to the individual involved, but all of the income is attributed due to the PSI rules. So personal services businesses are in for JobKeeper if their turnover, or if they can demonstrate that 30% drop in turnover. In that situation, it's only going to be one individual in that entity that's eligible for JobKeeper, because we're saying there's no wages. So it's going to be that business is going to have to nominate one of its small business participants to get the JobKeeper. So if there was let's just say a husband and wife operating two different businesses through the one entity, it's only going to be one of those individuals that will be eligible for this JobKeeper subsidy. Can a business be eligible for both the Cashflow Boost and JobKeeper? So the answer to that's yes. So they're completely separate government measures, and there is no crossover in that if you get Cash Boost, you don't get JobKeeper, or vice versa. Are employees who have returned from maternity leave eligible for JobKeeper assistance, even if there is no work for the employee to do? So because if the employee is coming back from maternity leave, that employee will be an eligible employee and therefore be eligible for JobKeeper. So you need to pay that returning worker from maternity leave the JobKeeper payment. Now, if a business does not satisfy the decline in turnover test at the start of the JobKeeper scheme, but does satisfy the test in a later test period, can the business apply for the JobKeeper assistance from that later period? So the answer to that's yes. So we're commencing JobKeeper now, which means you need to show a 30% drop in turnover, or 50% if more than $1 billion, in March, April, or the April to June quarter. Now, if you don't show that drop in turnover until June or July, it's at that period of time you register for JobKeeper, and you will receive JobKeeper from that point on until the end of October. So can a sole trader receive JobKeeper payments when they are also an employee of another business? So I'm going to make the assumption here that the sole trader is an eligible employee of another business. So if that's the case, then they're not eligible for JobKeeper. So if their business is a bit of a side hustle on top of what is their normal salary and wage work, they're not going to be eligible for JobKeeper. However, if that sole trader was a short-term casual for another business, they wouldn't be an eligible employee, so they would be eligible for JobKeeper. And that's the end of our frequently asked questions. So we'll finish there. My email's across the bottom, so that's jon.traynor@fieldgroup.com.au. Feel free to contact me or reach out to the team. You can get the whole office at info@fieldgroup.com.au. Hope we educated you somewhat on JobKeeper, and obviously if we can help, don't hesitate to reach out. Cheers.